Steve, thank you very much.
Pleasure,
as always, we're going to discuss this further here to debate whether or not it's changing the path of rate hikes. Mattie Duppler from National Taxpayers Union and Peter Conti-Brown from the Wharton School of Business. Very good afternoon to you both. Mattie, I'll start with you. What was your main takeaway?
Well, I think that, as was mentioned before, data dependence is really the key term as you look at what Powell said today and going into the next month. But listen, I think that's actually really important to be paying attention to what we think would happen if the Fed didn't hike. There's been a lot of conversation about whether or not a hike in December is wise. I think that right now, because of the forward guidance that we've had and the tumultuous 2 months that we've seen in the market, if the Fed were not to hike now, it would certainly signal broad criticism of both the Fed's independence and its ability to really read the tea leaves on what the economy is doing. So I think it's very important for the Fed to stay the course now, and I think we saw that from Powell. Powell saying very much that he's dependent on the data, but also that he wants to be flexible and agile when it comes to reading what's happening in the economy. You know, you mentioned before about what the next year looks like. There's still not broad consensus on FOMC about how many hikes we'll see in 2019. I think it's very important for the Fed to stay the course going into that new year in order for us to have stability moving forward.
Peter, how did you interpret today's comments and the market reaction?
I see Chairman Powell trying to preserve himself some freedom of movement, not only because, as he said, in a dark room trying to find the furniture, the FOMC doesn't quite know where things will land. They're always going to be playing a game of catch-up, and I think what he's tried to do is walk back some of the certainty of a fixed path, and I think that's good. The problem is that with that freedom of movement is this look that Trump has tried to recast the Federal Open Market Committee's monetary policy as a battle of personalities. And it's hard to see whether or not the Fed is falling into that narrative or is pushing up against it.
Do you think inflation could surprise to the upside, Peter?
I think it could do. I think the problem with having a 2% inflation target is if you chronically undershoot that target and then overreact by hiking interest rates when it goes a bit above, what you've done is actually reset your inflation target well below 2%. And so I think those who advocate, including on the FOMC, saying, hey, we should relax a little bit, let inflation overshoot so that we can be consistent on that target, probably have the better of the argument. The problem is that the Fed has reached its credibility by delivering those goods and price stability. So the Fed is a bit between a rock and a hard place in terms of its history of credibility and the fact that they haven't hit their target very well in the last few years.
I mean, the credibility also comes from its history of independence, Mattie, and the president continues to ramp up his attacks on Jay Powell and his policy. How do you think that complicates all of this?
Listen, I tell clients this all the time, that you can make decisions based on how you think the president should act, or you can make decisions based on how the president will act. And we know if the Fed does not raise rates in December, as has been anticipated both by markets and economists for the last quarter, that this will create an environment in which public policy becomes much more difficult really to move forward on, simply because the president will have a reaction. I think it's really important for the Fed to stay the course going into next year, because there are other public policy difficulties and challenges that I think will create a lot more volatility if we don't have a Fed that is at least living up to the expectation that is set. I'm talking about those trade pressures going into the G20 at the end of this week, knowing what the United States is going to do when it comes both to China but also to the EU and potentially new auto tariffs as we see this conversation about GM continue to progress. I think it's very important that the Fed create a stabilizing environment here as public policy continues to create big questions about what next year's economy looks like.
Yep, and on that front, we've got more news this week. Fed minutes tomorrow, and then that G20 meeting with President Xi later in the week. Mattie Duppler, Peter Brown, thank you very much.
Thank you.
Stocks are surging today. The Dow has gained 1,000 points in just 3 trading sessions. Let's get to our closing bell.